Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a document that's a bit like a company announcing it's getting a whole new wardrobe and a new personality. Let's see if this makeover is more than just skin deep. This report is about KKR Credit Opportunities Portfolio, and they're planning some big changes. Think new name, new investment strategy, and even a new way for shareholders to cash out. It's like the fund is getting a complete reboot. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come and discuss with other people. First off, the fund is changing its name. It's going from KKR Credit Opportunities Portfolio to KKR Asset-Based Finance Fund. It's like they're trying to sound more focused, and while asset-based, it's a signal that the company is evolving and expanding into new financial instruments. More than just a name change, the fund is also tweaking its investment goals. The new objective is to generate current income and, to a lesser degree, long-term capital appreciation. Basically, they want to give you money now and maybe a bit more later. They're aiming for a mix of steady payouts and potential growth. Now, here's where things get interesting. Their investment strategy is shifting to focus on something called asset-based finance, or ABF. Think of ABF as lending against specific assets like loans backed by cars, equipment, or even future payments. The fund will be investing across consumer, commercial, physical assets, and contractual cash flows. They will allocate money across 4 segments of asset-backed finance, which are consumer mortgage finance, commercial finance, hard assets, and contractual cash flows. They will allocate money across 4 segments of asset-backed finance, which are consumer mortgage finance, commercial finance, hard assets, and contractual cash flows. Let's break down those key areas. Consumer and mortgage finance means investing in loans related to things people buy, like cars, houses, and credit card debt. The company mentions point-of-sale loans and solar residential loans as an example of what they would finance. Commercial finance is where they'll be funding businesses, providing equipment leases, factor in receivables, and offering trade financing. In other words, they're helping companies manage their cash flow and acquire assets. Hard assets involve things you can touch, like aircraft, infrastructure, and real estate. These are investments secured by physical items that generate cash flow. The company uses single-family rentals and rail cars as examples. Lastly, contractual cash flows are revenues from things like intellectual property, insurance, and royalties. It's a more diverse area that can provide stable returns with lower correlation to the economy. They will be investing in things like loans, private securitizations, basically packaging loans into securities, and even equity stakes. They will also use the advisor's understanding of structural nuances that drive underlying cash flows, including liquidation value, credit enhancements, structural protections, and security collateral packages. Important note, these investment strategies aren't set in stone. The board can change them without asking shareholders, so keep an eye on what they're up to. The fund also has a new agreement with its investment advisor, KKR Credit Advisors. The old fee was 130% of the fund's assets. Now it's a 2-part fee, a base fee of 1.00. Now it's a 2-part fee, a base fee of 1.00% of net assets, plus an incentive fee of 10% of net investment income above a certain hurdle. That hurdle rate is 5.0% annually. If the fund earns more than that, the advisor gets 10% of the excess. It's a way to reward the advisor for good performance. There are some temporary fee waivers in place. Through the end of the year 2025, the advisor is waiving either the old management fee or the new base management fee. Then for 2026, they'll waive fees to ensure the total fees don't exceed 1.74% of the fund's assets. The advisor is also limiting certain fund expenses to 0.60% of net assets. If expenses go over that, the advisor will cover the difference. This is to keep costs in check for investors. Here's a big change for shareholders. The fund buys back a portion of its shares each quarter. Right now, they have to offer to buy back at least 10% of the shares. They want to lower that minimum to 5%. This gives the board more flexibility in managing the fund. To smooth things over during this transition, the fund is offering to buy back 25% of its shares in the 3rd quarter. That's a chance for investors to cash out if they're not on board with the changes. So now, what does all this mean? The fund is pivoting towards asset-based finance, which can offer higher yields but also comes with its own set of risks. The new fee structure incentivizes the advisor to perform well, but it also means higher fees if they do. The change in the repurchase policy gives the board more flexibility, but it could also make it harder for investors to exit. One notable risk is the complexity of asset-based finance. Understanding these investments requires specialized knowledge, and there's always the risk that the underlying assets could underperform. On the other hand, the focus on current income could be attractive to investors looking for stable returns. In conclusion, this is a fund undergoing a significant transformation. It's moving into a new area of finance, changing its fee structure, and tweaking its repurchase policy. Whether these changes are good or bad depends on how well the fund executes its new strategy and whether investors are comfortable with the risks involved. Alright, that's our breakdown of KKR Credit Opportunities Portfolio's planned changes. What's your take on these moves? Are they a sign of innovation or are they raising red flags? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.